welcome back. Well, let's quickly welcome on board Mr. Anmol Singh Jaggi. He's the co-founder at Gensol Engineering, joining us on the show. Mr. Jaggi, hi, good to be speaking with you. I understand that you've made big announcements when it comes to the Vibrant Gujarat Summit and the MOU that you have signed with the state government there for a 2,000 crore investment. Talk to us about the timeline of this. What would the plant be used for? And more importantly, how are you going to fund this capex?
Thank you for having us. First of all, the plant that we have announced is part of the plan that we have to expand more into EV manufacturing. We clearly believe that EV manufacturing is deficit in the country, and a lot of companies need to step up on that. As far as our timeline for this goes, as we have already informed that our plant one, which is at Chakan, Pune, is going into operationalization by March and April of this year, and we will start our commercial production by March, April of 2024. Based on the market demand, and I'm very confident that we will get a very blockbuster result. Based on that, we will be going for plant 2 in the state of Gujarat. We already have identified land at Sanand, and we have acquired portions of that land also. And we will be going ahead with the construction of the plant based on the demand that our plant 1 is able to generate. To put it in timeline perspective, I think that sometime in 2025 is when we will begin the construction of this plant.
So that helps us put it in context. 2025 basis the demand. You will plan the expansion in Gujarat. But how will you fund that? Is internal accruals enough, or will you be taking on more debt or raising equity?
So as we have already informed that Gensol Engineering is in the process of raising 300 crores through a mix of preferential and QIP. That money will of course come handy to our use. Plus, we are also generating decent amount of cash from our solar EPC business. And if you look at the EV manufacturing business, our EV manufacturing business is a debt-free business as we speak. So there is a lot of upside on the debt also if we need to take in the EV manufacturing business on a standalone basis. So a mix of debt, a mix of the QIP pref that we are raising right now, and a lot of cash that we are generating through our core EPC business that will get deployed to fund the 2025 plant.
Okay, point taken. I just wanted to scratch that point further, that 300 crore QIP, which you've just announced a couple of weeks back. What kind of investors are you looking at? What is the way of this fundraise? Is it going to be a preferential issue that you're doing? And what kind of investors are you looking at? What's the feedback that you've got?
I think the market is looking very decent for companies which are in emerging spaces like green energy and electric mobility. I think there is a huge amount of investor interest when it comes to these two sectors. And clearly, Gensol Engineering is a leader when it comes to both renewable energy and electric mobility. So we are seeing very good amount of interest. Unfortunately, we are in our silent period as we speak. So till the time we do our results announcement, so we have not been able to actively pitch to multiple investors. But the initial feedback before the silent period that we got was very, very positive. Post when we complete our silent period, after the result declaration, we will go out and raise that. We will go out and raise the 300 crore rupees.
Mr. Jaggi, I was just going through your revenue profile, and if I look at FY21, where your revenue was close to 60 crores, it's jumped all the way to 400 crores in FY23, and in first half of the year, you've already done 200 crores. If I have to ask you, what's the...
First half, we have done 340, ma'am.
Oh, okay. So I stand corrected. You've done 341 in the first half of the year already. If I extrapolate that, when do you expect to hit the mark of, let's say, 1,500 to 2,000 crores? Is 1,500 crores, 1,000 to 1,500 crores, is this something which is likely over the next couple of years itself?
So if we look at quarter 4, which is the quarter in which we are, this quarter, we should be able to clock in the revenue of north of 350 crores in this quarter itself, which would mean on an annualized basis, this will be close to 1,400 crores. I am decently confident that in FY25, we will, the group put together, the Gensol companies group put together will do in excess of 1,500 crores, which is our EV manufacturing, our EV leasing, and our EPC business put together. We will be able to easily achieve the 1,500 crore revenue mark when it comes to FY25. In fact, this year we will be close to between 900 and 1,000 crores, and next year should be very easy to touch the 1,500 crore mark.
Yeah, looking at the run rate, it does seem realistic, 900 to 1,000 crore this year and 1,500 crore next year. But what about the margins? Because you've been consistently improving your margins as well. What's a sustainable number? Let's say at a 1,500 crore top line, what would the margin profile look like?
So on our EPC business for the last 6 quarters, we have demonstrated a 15% plus EBITDA. I think this is a stable state. I do not expect that we will be able to increase our margins from here on. So it will be continuously at about 15%. It will be our endeavor that as we even scale up to very high, large numbers, we are able to maintain this kind of a margin. So if we are doing about 1,500 crores of EPC revenue in next year, we could easily do 225 crores of EBITDA on it.
Sure. And just last question before I let you go. I wanted to get a sense in terms of the overall policy overarching theme which is there. There has been a bit of a flip-flop when it comes to the EVs, at least in the two-wheeler segment. Not sure if it would be replicated in four-wheelers or not. What's the budget expectation or any policy action that you're anticipating? And also if you can quickly put in a word how you expect Blue Smart to grow going forward.
Sure. So when it comes to budget, I think we have made a lot of representations to government that for some reason the charging infrastructure is still taxed at 18%, and that actually does not fathom well when the purchase of electric cars is at 5%. Why does the charging need to be at 18%? And that is numerous. We have represented with the finance ministry and many officials in the finance ministry of why the charging GST on charging infrastructure should reduce from 18% to 5%, and that will be one of our key asks from this budget. And I think I will request our friends in media also to portray it multiple times to the government on how 18% GST is actually an impediment to the growth of electric mobility. So I will request for that. In terms of Blue is doing extremely well. We are at north of 6,000 cars now. We are adding a huge amount of fleet. We are expanding very well. The customers are loving the service, and it's going absolutely great as we had planned. So Blue is absolutely on track with hopefully Blue also touching the 1,000 crore GMV mark in FY25.
Okay, the 1,000 crore is something that we'll watch out for Blue Smart as well. Mr. Jaggi, on that note, we'll let you go. Thanks so much for making time. Time now to slip into a very short break. Don't go anywhere. When we come back, RBC Jewelers is on our radar. That because the stock has been locked in upper circuit for the last couple of trading sessions. We'll discuss with Mr. Harit Zaveri as to how the wedding season has panned out and what's the prospect for the company going forward.